Here's a shocking fact. Nearly 90% of traders lose money. That means if you put 10 traders in a room, only one will come out profitable in the long run. And let me be honest with you, it's not because those traders are dumb or because they don't want success badly enough. It's because most traders fall into the same traps again and again. Today, I'm going to expose these mistakes, show you why strategy alone isn't enough, and explain how mastering psychology is the real key to breaking into the 10% that actually win. Stay with me until the end, because this might change the way you look at trading forever. Let's start with strategy. You've probably heard the phrase, if you fail to plan, you plan to fail. That's exactly what happens in trading. Most traders make these rookie mistakes. No clear plan. They enter trades just because a chart looks good. No defined entry, no exit, no stop loss. That's like playing poker blindfolded. Over-leveraging. They risk way too much on a single trade. A small market move wipes out their entire account. Over-trading. They take trade after trade, thinking more trades equals more money. In reality, more trades just mean more mistakes. Chasing the market. The price moves without them, and instead of waiting, they jump in late, usually right before the reversal. Think about it like building a house. If your foundation is weak, no matter how expensive the roof or the paint is, the whole thing will collapse. Your strategy is your foundation. Without it, your trading career crumbles. But here's the twist. Even traders with a good strategy still lose money. How is that possible? It's not just about the strategy. It's about the trader's mind. You see, the strategy tells you what to do, but psychology decides if you actually do it. This is where 90% of traders fail. They don't lose because their strategy is bad. They lose because emotions take over. Here are the biggest psychological traps. Fear of missing out. FOMO, you see a big move, your heart races, and you jump in late. More often than not, you enter at the worst possible time. Greed. One winning trade makes you feel unstoppable. You double your risk only to lose it all in the next move. Impatience. Instead of waiting for your setup, you force trades out of boredom. Or you close a winning trade too early because you're scared of losing profits. Revenge trading. You take a loss, and instead of stepping back, you jump right back in to win it back. That almost always leads to bigger losses. Think about this. The market doesn't just test your strategy. It tests your patience, your discipline, and your emotions. If your mind isn't ready, you'll sabotage your own trades. Let me give you a quick story. I once knew a trader who had a solid strategy. On paper, his system worked. But every time he had 2 losing trades in a row, he'd double his risk on the next one, trying to recover quickly. Eventually, one bad move wiped out months of profits. Not because his strategy was broken, but because his psychology was. And guess what? That's the story of most traders. They don't fail because they don't know what to do. They fail because they can't control themselves when it matters most. So what's the solution? You need to master both sides of trading. Strategy gives you the blueprint. When to enter, where to exit, how much to risk. Psychology makes sure you actually follow that blueprint, no matter how you feel in the moment. Think of it like this. If strategy is the engine of a car, psychology is the driver. You could have the fastest car in the world, but if the driver panics and slams the wrong pedal, you're crashing. That's why the best traders are not just analysts. They're disciplined operators. Here are a few things you can do right now to start aligning your strategy and psychology. Use a trading journal. Write down every trade, why you took it, and how you felt. You'll start spotting emotional patterns. Risk small. Never risk more than 1 to 2% of your account on a trade. This protects you from letting emotions spiral. Create rules and follow them. Define when you'll trade, what setups you'll take, and what conditions stop you from trading. Treat it like law. Take breaks. If you feel emotional, step away. The market isn't going anywhere. Your mental state matters more than the next trade. Do these consistently, and you'll already be ahead of most traders. Here's my challenge to you. The next time you trade, don't just ask, what's my strategy? Ask, am I disciplined enough to follow it? Here's a tough truth. 9 out of 10 traders lose money. Now, I want you to imagine this. 10 traders open their laptops on a Monday morning. They all have dreams of financial freedom, of quitting their jobs, of making money work for them. By the end of the year, only one of them is still standing. What happened to the other 9? They didn't just lose trades. They lost their discipline, their focus, and sometimes even their confidence. Today, I'm going to tell you why they failed and how you can avoid their mistakes. And to make this real, I'll walk you through the actual stories of traders just like you. Some failed. Some turned it around. By the end of this video, you'll see exactly why strategy alone isn't enough, and how psychology is the hidden weapon of the 10% who succeed. Let's start with John. John was new to trading. He watched a couple of YouTube videos, downloaded a trading app, and thought, how hard can this be? The first week, he doubled his money. He thought he had cracked the code. But here's the problem. John had no strategy, no rules, no risk management. The next week, the market shifted. He lost half his account in one trade because he had no stop loss. The week after, he blew the rest chasing his losses. John's mistake? He treated trading like gambling. No blueprint, no plan. And just like a gambler, he ended up broke. Most traders are like John. They think trading is about luck or instinct. But here are the common strategy mistakes they make. No clear entry or exit plan. Over-leveraging, risking way too much on a single move. Over-trading because they believe more trades equal more money. Chasing the market, always entering late instead of waiting for confirmation. Without a tested strategy, your trading career is just like John's, short-lived. Now let's talk about Sarah. Sarah was different from John. She actually had a solid strategy. She backtested her system, wrote down her rules, and understood risk management. But here's where she failed: psychology. Whenever Sarah lost 2 trades in a row, she panicked. She'd break her own rules, risk more than she should, and try to win it all back with one big trade. One night, she saw the market moving fast. Fear of missing out kicked in. She ignored her plan and jumped in late. The market reversed, and she lost a huge chunk of her account. Sarah's mistake? She had the right strategy but the wrong mindset. And that's what happens to most traders who think they're prepared. The market doesn't just test your system. It tests your patience, your discipline, and your emotions. Here are the psychological traps that take traders down just like Sarah. Fear of missing out, chasing trades that are already gone. Greed, risking more after one win. Impatience, forcing trades instead of waiting for the right setup. Revenge trading, trying to recover losses immediately. These emotions are why most traders sabotage themselves, even when their strategy works. But then there's David. David wasn't the smartest trader in the room. He didn't have the fanciest indicators or the most complicated strategies. But he had 2 things: a simple plan and the discipline to follow it. He risked only 1% of his account per trade. He journaled every trade, writing down why he took it and how he felt. When he lost, he didn't chase the market. He took a break, reviewed his plan, and came back calm. At first, his growth was slow. Small wins, small losses. But after a year, his account was growing steadily while others had already quit. David's success came not just from his strategy, but from his psychology. He mastered both. And that's the difference between the 90% who fail and the 10% who win. So let's put this all together. Strategy gives you the blueprint. When to enter, when to exit, how much to risk. Psychology makes sure you actually follow that blueprint, no matter what emotions you feel. If strategy is the car engine, psychology is the driver. A fast engine without control leads to a crash. A good driver with no engine goes nowhere. You need both. Here's how you can start becoming more like David and less like John or Sarah. Write down your trading rules and treat them like law. Use a journal to track not just trades, but your emotions. Never risk more than 1 to 2% of your account per trade. When emotions run high, step away. The market will still be there tomorrow. Do this consistently, and you'll already be ahead of most traders. So now you know why 90% of traders lose money. John failed because he had no strategy. Sarah failed because she couldn't control her psychology. David succeeded because he mastered both. Which trader do you want to be? If you got value from this, smash that like button, Subscribe for more Forex and trading education, and share this with someone who's struggling in their trading journey. And tell me in the comments, do you relate more to John, Sarah, or David? Let's talk about it.